Imagine, just for a moment, if you had invested $1,000 in Netflix 20 years ago. Today, you'd be sitting on approximately $350,000. Mind-blowing, right? Well, today's world is packed with opportunities just like that. If you're new to the investment game, buckle up as we navigate the top 7 investments for beginners. The world of investment is full of tales of fortunes made and lost. While we hear tales of great investors like Warren Buffett and Peter Lynch turning thousands into billions, the real magic lies not just in picking the right stocks, but in understanding a diverse array of investments. As a beginner, diversifying your portfolio is the name of the game. Here's our take on the top 7 investments can set you on a path towards financial success. 1. Stock market. The stock market represents ownership stakes in businesses. When you purchase shares or stocks, you're buying a piece of that business. As the business profits and grows, so does the value of your stock. Starting with blue-chip companies, those with a long-standing history of stability and performance, is advisable. Companies like Apple, Microsoft, and Google are examples of blue chips. They tend to be less volatile than newer or smaller companies. If you had invested $1,000 in Tesla stock a decade ago, that investment could be worth over $80,000 today, given the impressive growth of the company. Start with blue-chip companies. They often offer stability and dividends. 2. Exchange-traded funds, ETFs. ETFs pool together a collection of stocks, bonds, or other assets. They're designed to track and mirror the performance of a specific index or sector. Broad market ETFs, such as those tracking the S&P 500, provide exposure to a wide range of top U.S. companies, giving beginners a diversified start. Sector-specific ETFs, like technology or healthcare, allow you to invest in specific industries. Investing $1,000 in the SPDR S&P 500 ETF a decade ago could have grown to around $8,000 now, mirroring the general growth of the market. Broad market ETFs offer diverse exposure and can help protect against the decline of any single stock. 3. Cryptocurrencies. Cryptocurrencies are like digital money, but no central authority controls them. Think of Bitcoin, which started in 2009 as the first and most famous type. Since then, many other digital currencies, like Ethereum and Ripple, have emerged. They all operate in the online space, each with its unique features. Investing $1,000 in Bitcoin in 2010 could have transformed you into a millionaire today, showcasing Bitcoin's astonishing potential. However, the cryptocurrency market is known for its sharp highs and lows. For beginners eager to dip their toes in this dynamic pool, it's wise to start with modest investments to navigate the learning curve. Additionally, choosing reputable crypto exchanges is crucial. They serve as your gateway to this digital frontier, and their reliability ensures your investments are handled safely and transparently. 4. Real estate investment trusts. Real estate investment trusts allow individuals to invest in large-scale income-producing real estate without having to buy properties. They're required to distribute at least 90% of their taxable income to shareholders as dividends. Publicly traded real estate investment trusts can be purchased on stock exchanges. They offer a way into real estate markets with the added benefit of liquidity. If you had invested $1,000 in the Vanguard Real Estate ETF a decade ago, it might now be worth around $4,500, given the consistent growth in the real estate market. Real estate investment trusts offer exposure to real estate without owning physical property. 5. Mutual funds. Mutual funds are like a big pot where many people put their money. This pot is then used to buy a mix of things like stocks and bonds. Experts decide what to buy with the pot's money, aiming to make it grow. For beginners, it's like joining a team where you all chip in and rely on a pro to make investment calls. When picking a mutual fund, look at its track record, who's managing it, and how much they charge for their service. Funds that charge less, have low expenses, are often a good pick because high charges can eat into your profits. So it's a way to invest with others and have experts manage the money. A $1,000 investment in the Vanguard 500 Index Fund a decade ago could be worth around $4,700. 6. Peer-to-peer, P2P lending. Peer-to-peer lending is like a digital middleman that lets people lend money to other people online. Instead of borrowing from a bank, someone gets a loan from regular folks wanting to earn some interest. Websites like Lending Club make this happen. If you'd invested $1,000 in P2P lending, it's a bit like lending that money out to others. Over time, they pay you back with a little extra, as a thank you or interest. Historically, with rates between 3 to 8%, Your $1,000 might grow to about $2,800 after a few years. It's a modern twist to the old way of lending and earning money, but done online and between everyday people. 7. Bonds. Bonds are like IOUs. When you buy one, you're essentially giving a loan, usually to big entities like the government or a company. They promise to pay you interest periodically for your loan. Once the bond matures or reaches its end date, they give you back the original amount you spent on the bond. If you're a beginner and want a safer bet, U.S. Treasury bonds are a good choice. The government backs these, so there's very little risk of losing your money. However, because they're so safe, they usually offer smaller profits compared to riskier investments. In short, with bonds, you're playing it safe, earning steady but typically lower returns over time. The investment world is vast and varied. Great investors have made fortunes not by putting all their eggs in one basket, but by understanding and diversifying their investments. As you embark on your investment journey, remember to research, stay informed, and perhaps most importantly, be patient. The story of turning thousands into millions isn't about overnight success. It's about smart choices and time.